This rally in Bitcoin is absolutely unprecedented. We are almost at 21K. We have wiped out all of the losses of the FTX collapse, and nobody is noticing. Nobody is happy about this. Now, why is that actually, right? Why aren't people getting excited for this? It's because people were scared to buy this bottom. There are all of these threats floating around, right? Is Binance still solvent? Is Grayscale going to have big problems with the Grayscale Bitcoin Trust? Is Tether still to be trusted? All of these potential black swan events that pushes people away from crypto. The attention on crypto is incredibly low. The subscriber numbers are not growing for any YouTube channels. Thus, people simply are not buying, right? People bought when there was a lot of hype, and they tend to also hold their Bitcoin during this bear market, right? You don't want to sell low when you already bought high, so you rather just wait it out. You can see this in the 1 year hodl wave, for example, right? The prior video I've just published showing that Bitcoin hasn't moved. 2/3 of Bitcoin haven't moved in the last year. This is pretty much all-time high. So people aren't really selling. There are a lot of diamond hands, meaning Bitcoin is able to somewhat withstand this crisis. But what's interesting is nobody is buying, or at least very few people are buying. Only the hardcore believers are buying, and they now might be happy around this rally. But it's interesting, right? How come Bitcoin suddenly pushes up that quickly? Did the retail sentiment really change? The answer is no, right? This tends to be, this is at least my belief, this tends to be institutional driven. And when you follow crypto Twitter, a lot of people say this might be due to short squeezes. Now, what's a short squeeze, first of all? Short squeezing means you bet as a market maker, you bet against the people that want the price to fall. So when you short, you are betting on falling prices. You want the prices to continue to fall. You're basically borrowing the asset. You denominate your loan in that asset to then sell it off the market, wait for the price to fall, then buy it back for a lower price, and then make a profit out of this, right? Shorting. Now, short squeezing is when you as a whale might put those people into liquidations, meaning when the price is falling, you borrowed, for example, your Bitcoin in this case, you want it to further fall, but you've got some kind of collateral on your loan, right? And when the price doesn't fall, but when it actually rises, then your collateral might be taken away from you, right? You have to pay a liquidation fee. So there are people with real interests in the market that want short speculative money to get out of the market, to push them out, to push up the price. And the profit that might be generated from such a short squeeze might be higher than the transaction costs. Now, when do those kinds of short squeezes appear? They usually appear when an asset is relatively illiquid, so when it's not traded very often, and when a lot of short positions have been opened. So when the balance of shorts to longs is very much in favor of shorts, people are bearish. But on the other hand, there's not a lot of trading activity, meaning with just a little bit of money, you can push up the price quite a lot. So that's why you see short squeezes normally rather in smaller altcoins, right? You see this very often in the small alts because you don't need much money to actually squeeze. Now, the problem is, currently in the altcoin market, there aren't too many people that bet on falling prices. People simply just bet on falling prices of Bitcoin right now. So you have to take more money, you have to move a larger asset. That's currently apparently what's happening here. So Bitcoin is outperforming everything else. When we look at, for example, Bitcoin relative to the Nasdaq, this is now the Bitcoin price divided by the Nasdaq, we can see after the FTX collapse, Bitcoin was able to actually recover. It was able to outperform tech stocks. Now, why is this interesting? It's interesting because tech stocks themselves, they went down in the recent past. And one might expect, actually, when tech stocks go down, Bitcoin should be going down even more, right? Because Bitcoin is more risky. It has more volatility. Tech stocks, they might be moving like this, right? A little bit of volatility. Bitcoin tends to move much more, right? When in general, the market is going down, Bitcoin is expected to go down more, and vice versa. Now, this is not what we saw in the last weeks, right? We saw tech stocks going down, but Bitcoin staying somewhat flat, meaning Bitcoin relative to tech stocks actually appreciating. And this has something to do simply with the diamond hand nature of Bitcoin, right? Bitcoin has very strong believers, and these strong believers think that it will recover at some point, and the risk versus reward at these low levels is obviously way better than when it's at 70K. So the diamond hands are not selling, they simply just wait for the next all-time high to come. If you're already buying high, you don't want to be selling low as well, you simply just wait for the next high. Now, what's also interesting around this is when we look at, for example, Ethereum relative to Bitcoin. Ethereum did not go up as much as Bitcoin. So this is really a Bitcoin-led rally. When we look at the altcoins measured by the altcoin market cap, which is total 3, and we look at its performance, total 3, relative to Ethereum, we see that the altcoins are underperforming even more. So it's Bitcoin at the top, then comes Ethereum, and then comes the altcoins. The altcoins are doing the worst right now. Underlying again, showing again this current effect that this is a Bitcoin-driven rally and that it's not retail-driven. So it's not retail that suddenly changed their mind and that push everything up. It's the big players, the big whales that want Bitcoin to shoot up. And because of the illiquid supply of Bitcoin, most of the money, most of the Bitcoins are currently held in very strong inactive wallets. You can move the price with comparatively little capital. That's currently what's happening. The whales want it to go up, and that's why it's going up. It's not that suddenly there's a lot of excitement around Bitcoin. It's simply just probably short squeezing that's happening. Maybe some other drivers that simply push up the demand currently for Bitcoin. How sustainable is this demand? It very much depends on whether or not retail will jump on this rally. This short-term rally might be short-lived. It might correct again. But it's also very much possible that we have already seen a bottom similar to how we seem to be bottoming out in tech stocks. This all comes down to the monetary policy of the Fed, right? Is the tightening going to continue, or will it become somewhat looser in the future, given that interest rates and inflation rates are getting closer and closer to each other, right? The inflation rate in the US is currently at 5.5% roughly. The interest rate is 4.5. So we've got a 1 percentage point spread. Once the interest rates cross the inflation rate, that's historically when tightening somewhat stopped, when inflation was somewhat under control, and when risk on assets could go up again. Now, will this cross happen? This 1 remaining percentage point, will it narrow down to 0? Let's see. Nobody has a crystal ball, but it's definitely worth watching because traditional finance seems to be now already somewhat bullish. At least tech stocks aren't getting sold off anymore. And on top of that, Bitcoin is even doing better than traditional finance, canceling out the entire FTX collapse, right? This is what I find so interesting. There's so much eyeballs on Sam Bankman-Fried and the fraud and the issue of will he get in jail, will he get bailed out, whatever it is. A lot of eyeballs on how bad crypto really is. But once we completely get out of this mess, right? Once all of this destruction has basically turned around for the people that stayed conservative, that just held Bitcoin, I don't think there's too much attention on this. So that's the important thing about this, right? You want to have eyeballs on crypto when nobody else is looking at it, and you want to exit when everybody else is getting super excited. You want to be a contrarian in these kinds of cycles. You want to be almost antisocial. When everybody thinks buy crypto, it's super great, all of your friends get excited, everybody asks you about crypto, that's when you have to sell. You have to sell when everybody gets excited about Dogecoin and about the next great JPEG picture. But you have to buy when nobody's interested in it anymore. So you have to figure out a way to stay interested when everybody else is leaving, and you have to figure out a way to stay strong mentally and sell these massive amounts that you then have, right? When you dollar cost average in at low prices and then you get like your 10x, then suddenly you've got a huge amount, and then you have to make a very strong decision against the rest of the markets. Selling is even harder than buying, actually. I made another video on this just recently, so feel free to check out this channel. You have to be contrarian. And this is still one point in the market where you are contrarian. There are still not a lot of eyeballs on crypto. Maybe this rally triggers a few eyeballs, but let's see how sustainable this is. I still think if you're buying Bitcoin now at these current levels and you are okay to continue buying in every month a little amount, right? Something that's not too much for you, but that still might matter after, say, 2 or 3 years. When you continue buying in and you then sell in the next bull run, that might happen this year, it might happen in 2 or 3 years, it doesn't really matter. The later it comes, the better, actually, because the more time you have to dollar cost average in. If you stick with that plan, I'd be very surprised if you don't make money. I made money this way personally in the last bull run. I started buying in around here at around 6.5K. So we went down from 20K to 6.5K, and I thought, oh, okay, this seems to be a good price. And I bought in every month what I considered relatively little money. So it was around 10% of my income. I bought in 10% every single month. And then you had the crash, right? Another 50% crash. But it wasn't that bad at the time for me personally, because first of all, I didn't DCA in for such a long time just yet. And second, I could still convince myself I can buy now Bitcoin for even cheaper. And that's the nice thing about dollar cost averaging. It gives you this nice support psychologically. If it goes down further, you simply got more for your money. And if you long-term believe in Bitcoin, then this is great. If you have a strong conviction, stronger than the other people, if you're strongly convinced that Bitcoin is going to recover because of its limited supply compared to fiat, and that at some point people want to store their wealth in something that can't be confiscated, etc. If you've got the belief that there is some kind of utility value in Bitcoin, which I also discussed just recently in another video, feel free to check out the channel. If you have the strong belief, then you can still continue buying in every month, even though everybody else is giving up. And then you can simply just wait and see the price 10x. And that's then when you have to sell. And that's actually the tougher part, right? It's not buying low every month. That's so hard because the amounts are relatively low. It's selling these massive amounts that have 10x'd that you dollar cost averaged in for the last 2 or 3 years, because then the real money comes into play, right? Let's say you dollar cost average in for $1,000 every month and do this for 3 years. You're now at 36K. Now at 10x's, you're now at 360K. Okay, so you go from 1K a month to 360K in your portfolio after the bull run. And now you have to make this big decision of hundreds of thousands of dollars to sell and not to get into the subsequent bear market. That's the tough part. But right now, it's still time to buy, right? Not necessarily super short term, because this is potentially a short squeeze, and short squeezes normally deflate after they have made their profit. That being said, if your time horizon is long enough and you believe in Bitcoin over the very long term, there is no harm in buying now and selling 3 to 4 years from now when the real rally starts again. If you found this useful, please give this a thumbs up. Feel free to leave your comments as well. Check out the other videos on this channel. Also feel free to share. Give this more eyeballs, right? If you're buying now, you're one of the few people, you're part of the minority, and it's the minority that wins. It's not the majority. So you're probably going to make quite a bit of friends recommending this to others that then might be buying or might not. If they do, then of course, it's probably going to be turning out great for them. So again, thanks again for watching. See you in the next video. Bye-bye.